Internal Revenue Service IRS tax news. IRS deadline for third quarter estimated tax payments is September 15th. Be aware that the deadline is approaching. Lines, once killed, being somewhat like zombies coming back from the grave in order to eat our brains and take our money in the form of deadlines. Super scary stuff. But anyways, let's get down to the text. There's an IRS YouTube video here on estimated tax payments. Link to that. IR 2021-177, September 7th, 2021, Washington. The Internal Revenue Service reminds people that September 15th, 2021 is the deadline for third quarter estimated tax payments. This generally applies to people who are self-employed and some investors, retirees, and those who may not normally have taxes withheld from their paychecks by their employers. So general rule, when does the IRS demand their money? They demand their money during the year in which it is earned. Therefore, this being 2021, they want to be paid during 2021 for the income earned in 2021 for the most part. And that means that you cannot wait till you file the tax return, which would be by April 15th, typically of 2022, to make the payment. You might ask, well, what if I don't? The IRS hits you with the stick of penalties and interest. Therefore, you want to make the payments during the year. For most people, you don't have to do much to do that if you're an employee, because the IRS has persuaded the employer to take the money directly from you out of your paycheck before you get it and pay it to the IRS. Therefore, you are indeed making the estimated payments during the year during 2021. However, if you are not in a situation where the IRS has the convenience of being able to persuade the payer to take the money from you before you get it, then the IRS will persuade you directly. How? They will hit you with a stick of penalties and interest if you don't pay the interest and the payments during the year. So that means that if you're self-employed or you have income from other sources that aren't subject to withholding, possibly in retirement or something like that, then you need to make the estimated payments in order to avoid the penalties and interest. And that's a little bit difficult because in any situation, whether we have withholdings or whether we have the estimated tax payments, we don't know exactly what the payments should be because we don't really know until we do the tax return, because the tax code is quite complex with a progressive tax system and the laws are changing quite rapidly these days. So we don't have the same kind of consistency, and our job situations are most likely for many people changing a lot these days as well. So we have to make our best estimates as we go in order to make the payments on a quarterly base, estimated tax payments during the year, in order, once again, to avoid the stick of penalties and interest in one way or the other. So be aware of that. Be aware of the deadline. The U.S. tax system operates on a pay-as-you-go basis. This means taxpayers are to pay most of their tax during the year as they earn or receive income. Therefore, individuals not subject to withholdings may need to make quarterly estimated tax payments. Who should pay quarterly? In most cases, taxpayers should make quarterly estimated tax payments. There's a link to that for 2021 if both of the following apply. Individuals expect to owe at least $1,000 in tax for 2021 after subtracting withholding and tax credits, meaning you're going to owe money, and tax if you're going to owe money if you didn't have any withholdings. Therefore, you have to make payments during the year, because if you owe money, the IRS wants the money as you earn it. They expect their withholding and tax credits to be less than the smaller of 90% of the tax to be shown on their 2021 tax return. So when you're talking about withholdings, typically employer withholdings, so if you have the withholding subject to be able to cover that, then you are making the payments in the form of withholdings instead of making the payments directly yourself to the IRS. And you have these kind of safeguard rules, meaning 90% of the tax to be shown on 2021 tax return, or 100% of the tax shown on 2020 tax return. Their 2020 tax return must cover all 12 months. So those are kind of like the safeguard rules, hopefully that'll safeguard you from paying penalties and interest. In other words, even if you owe money because your income was higher than expected, if you're in the safe range, hopefully then again you're trying to avoid the stick of penalties and interest. So taxpayers with income not subject to withholding, including interest, dividends, capital gains, alimony, cryptocurrency, and rental income, normally make estimated tax payments. So if you're in one of those areas, then you're probably making estimated tax payments, or you should, And remember, if you're new to being in one of those areas, let's go through them again. Dividends, capital gains, alimony, cryptocurrencies, rental income, self-employment income generally as well, and if they might need estimated tax payments. If you're new to those areas and you're not used to making estimated tax payments, then you want to make sure you're looking into it, because a lot of people, it's kind of a shock that they have to make estimated tax payments, the process of how to do it, not knowing how much taxes you really should be paying because you can't calculate the tax return and you're in a new type of business, and the self-employment tax situation if you are self-employed, meaning something equivalent to the payroll taxes, Social Security, and Medicare, can be quite shocking as well to new people that are moving into, say, sole proprietorship. And you want to make sure that you're on top of that so it doesn't dishearten you when you do your taxes and you get behind on taxes possibly. So special rules apply. Some groups of taxpayers, such as farms, fishermen, casualty, disaster victims, those who recently became disabled, recent retirees, and those who receive income unevenly during the year. Publication 505, Tax Withholding Estimator Tax, there's a link to that here, provides more information on estimated tax rules. The worksheet is in Form 1040-ES, Estimated Tax for Individuals. There's a link to that here, or Form 1120-W, Estimated Tax Withholding Corporations, has details on who must pay estimated tax. Penalty for underpayment. Here they go. Here's where the stick comes in. They subtly wave the stick at you right here. So if a taxpayer underpaid their taxes, they may have to pay a penalty. This applies whether they paid through withholding or through estimated tax payments. A penalty may also apply for late estimated tax payments, even if someone is due a refund when they file their tax return. So basically, again, the IRS is saying we want our money as you earn it during the year 2021, either through withholdings, which we would prefer, or through estimated tax payments if we can't persuade the person that gives the money to the other individual who is earning it. And if you don't, then penalties and interest, right? So here's how that applies. So to see if they owe a penalty, taxpayers should use Form 2210. There's a link to that here. The IRS may waive the penalty if someone underpaid because of unusual circumstances and not willful neglect. Examples include casualty, disaster, or another unusual situation. So you might be able to persuade the IRS to basically bypass the penalties under certain situations. Typically, you would need to be in good standing with the IRS, meaning if you're constantly not paying the IRS, they're not going to negotiate as well. But if you're in a particular situation, then you might be able to waive the penalties. But you'd rather not be in that situation to have to waive the penalties and be aware of them and do what you got to do to lower the penalties. So an individual retired after age 62 during a tax year when estimated tax payments applied, and an individual became disabled during a tax year when estimated tax payments applied. How to figure estimated tax. To figure, now this you would think this would be an easy question. Well, how do I figure the taxes? Well, I wish I should just take my income as I earn it and then multiply it times whatever my tax rate is, right? But no, that's way too simple, because that would imply that we had a flat tax, but we don't. We got a progressive tax, and we've got credits and we've got deductions and all this other stuff that's really going to make it, a lot more difficult to project taxes. So because if you were to project it for the first quarter, then your tax rate would be different than for the entire year, for example. So again, it becomes kind of difficult to do the estimates. Let's see what they have to say here. To figure estimated tax, an individual must figure their expected adjusted gross income, their AGI, tax income, taxes, deductions, and credits for the year. When figuring 2021 estimated tax, it may be helpful to use income, deductions, and credits for 2020 as a starting point. So use the 2020 federal tax return as a guide. Taxpayers can use the Form 1040-ES to figure their estimated tax. Non-resident aliens use Form 1040-ES NR to figure estimated tax. So basically, you can use prior year as a starting guide. Now, you might say, well, I'm completely new to my sole proprietorship business. I have no idea how much I'm going to make because this is a new business. I'm doing pretty good, but last year was totally different because I was an employee or something like that. So how in the world would I possibly do it? And again, note that you still need to do it. So you're not going to be able to use that as an excuse to the IRS when they charge you penalties and interest. You may be able to lower some of them as a first-time case to plead your case on it for the first time, maybe. but but generally that's not gonna stop you from the penalties and interest. So you got to make some kind of estimate generally in those situations. So you want to rely on the last year if last year's applicable to this year. Last year's not applicable to this year for many people, given the law changes and given the basically people moving around from their jobs from one job to the other. They might be picking up more gig work and this and that. And therefore you have to do basically an estimate. And the IRS does have an estimator tool, which is in essence tax software. It's kind of like tax software. They can help you with that projection process to get the estimated tax payments, to be aware of how much tax you may be owing. So taxpayers must make adjustments both for changes in their own situation and for recent changes in the tax law. For instance, tax provisions in the American Rescue Plan of 2021 may impact an individual's tax situation. So again, the law, especially for lower income individuals, oftentimes because they've been adjusting these refundable credits greatly, can also impact where you're going to stand. So we have a lot of, in business terms, what they'd call uncertainty with both the law, with the economic kind of situation, and with what our income level is doing most likely for many people, which again means the projection's difficult. So for more information, see publication 505 under What's New for 2021. There's a link to that here. For information about these and other changes in the law, visit irs.gov, irs.gov, the IRS website. The instructions for Form 1040-ES include a worksheet to help taxpayers figure their estimated tax. Keep the worksheet for records. The tax withholding estimator on irs.gov. This is a pretty good tool here because their estimator, because of the complexity of the code, has gotten to be more and more in-depth, because you basically need software to project what your taxes are going to be into the future. And their estimator thing here is getting closer and closer to being that, basically a software tool that you can use to put a projection in that can help you with your withholdings and or making your estimated tax payment. So it's a step-by-step method to have the right amount of tax withheld from wages and pensions. It also has instructions to file a new Form W-4. Remember, the W-4 is the form that you're going to give to your employer if you got to change your withholdings there. So if you need to adjust your withholdings with the employer, remember, if you're an employee, the IRS persuades the employer to take the money from you directly before you get it, but they can't tell exactly what your particular situation is, how much money you owe at this point in time. So you still have to provide them with the W-4, and then the employer is going to try to avoid liability by simply following whatever you give them on the W-4. That means that if you ask them, the employer, go to the human resources, about how to fill out the W-4, they're going to give you very limited information because they don't want to give you tax advice. They're trying not to get hit with the stick of liabilities, and so on, and do their thing of withholding. So what you got to do is make sure that you get the W-4, use your withholding estimator, figure out what the withholdings should be based on your particular information, give it to your employer so they can just do what they need to do without getting hit with the stick. And then that's how the withholdings will basically work on that side. So that's a W-4 to give their employer an adjust the amount withheld each payday. Other IRS.gov resources, there's the Pay tab on the front page of irs.gov. It provides complete tax payment information, how, when to pay, payment options, and more. There's Form 2210 under payment of estimated tax by individuals, estate, and trusts. Form 2220 under payment of estimated tax by corporations. IRS under unemployment compensation is taxable, have tax withheld now, and avoid tax time surprises. So the fourth and the final 2021 estimated tax payment is due January 17th, 2022. So there's links to that information here. There'll be a link to this in the description.